Welcome back to my YouTube channel, and in today's video now we're looking at is to do the top analysis, and I start this top analysis from my higher time frame, which is the monthly time frame, because from this monthly time frame I'll be able to see the overall picture of how the market has been moving and what is the current state of the market. So as you can see on the screen right now, I have GBP USD on the screen, and we can see that this market has been moving in a very bullish manner ever since ever since October last year, and you can see that it's moving massively. So currently the market is dropping. The market is dropping currently, and that is and I'm seeing the reason why this is dropping actually, because sometimes I use my Fibonacci retracement level which is the 50-61-80 level, to identify places that market might have this potential of changing direction, or maybe when the correction is going to end. Like in this case now, as we can see from this point, from this end, I can see that my 50-61-8 level is within this region, and that is why market has been like finding it difficult to go past this level, because this level is a very strong level too that can change the direction of the market anytime soon. The only reason I'm on this time frame is to see the bigger picture, and you can see I've already mapped out all these major levels here. We have one here, we have another one here being respected. So if by chance price made its way back into this level, there's high tendency I'll be looking for a massive movement from this point, either to the downside or to the upside of the market. I move down to the monthly and to the daily rather. I move down to the daily time frame. This is where I map out how I'm going to tackle the trade for the day. So currently now, this is the daily time frame. You can see plainly that this market is moving up, and if you look at the current situation, if you zoom into the chart, you will see that the market is dropping. You're having this kind of this bearish movement to the downside. But if this thing is happening this way, there are places, there are levels that once price gets to, there's high tendency is going to react to those levels. So that is what I'm going to pull out on this daily time frame. Then I move down to my 1 hour time frame to look for possible entry for my trade. Now, look at how this market is moving up. We have this move, we have this correction, we have this move, we have this correction, we have this move. Then price started dropping from that point to this current level right here. So what I used to derive from this is that I will look far left to see why and where did this turning point started from. You can see if I look far left, I will see that there are some levels that price has reacted to in the past. You can see this level here is a very strong level for me because it's a supply level. It's a supply level in the past. You can see how this impulsive movement happened here, and how this stronger bearish movement happened here. And this level here, this candlestick we are seeing here, I regard that as my supply level. And look at how price reacted to it in future. That was why I was able to define this level to be a structure that might still hold price if price should find its way back into it. So that is one. Then I refine it to make more sense, so that I will have more things to go on with. So that's the first thing I'll be seeing here, and I call this my daily structure. That is why I have my labels here. I call it my daily structure, and that is one. Then two, I look at the current place the market is heading to. Is there any structure along the line? Yes, there is. Look at this level here. We have this level here where I'm expecting price to drop into. If price should make its way back into this level, that's going to be a very good spot for us to focus on and to see how price react to it. Then we'll follow the market. If price should get to this point, this high tendency is going to go back, because the overall movement here is still like a bullish movement, but don't know how the market is going to react when it gets there. The only reason I'm putting out these structures is to know how market will react to these levels. If by chance we have a break of this structure, that means this level is not valid for now. Then I will be waiting for the retest into it, and if there's a retest, something like this is what I'm talking about. if the price gets here and this structure fails to hold the price, then I'll be looking at some kind of retest into it. Then we'll be looking to short this trade into the next structure, which is here. You can see into the next structure, which is this is how I map out my structural levels on my daily time frame for me to know how I'm going to go into the trade on my lower time frames. So this is currently what I have here on the daily time frame on GBP USD, and I'll be expecting price to drop. So how will I enter this? Because there's still high chance for me to go into this trade. There's still high chance for me to go into this trade because I'm still expecting it to drop to this level. So this level here. Now, what I will do next is to go to my 1 hour time frame, or I first go to my 4 hours to see how price has been reacting. Look at this. After we had this impulsive movements here, I think this whole thing happened here the last 2 weeks thereabout. So after this structure was taken out, this support level was taken out and turned to a resistance level. This is what I'm talking about. So I have like three confluences that I use on my 4 hours, my 1 hour time frame for me to go into the trade. And on my daily time frame, the confluences I use generally, I use the Fibonacci retracement level, which is my golden zone, that is the 61.850 and 61.8 level. Then 2, I use the structure, market structure. If there's a break of, let's say, a resistance level, a support level, like in the case of this one now, if there's a support, if there's a break of the support level and price retested that support level, so I look at that too, and I use that to take decision on how I'm going to enter the market on the 1 hour time frame. That's 2. Then 3, I use the supply and demand levels too. So in this case, in this trade, I pull out a supply level here. I think this was during the weekend. This was my supply level. I was expecting price to pull into, but price didn't make it into it exactly the way I wanted it to be. But still, my structure still hold the price. So this alone has given me the confirmation that yes, I think the retracement of this impulsive movement has ended at this structure. So because of this doji candle that was formed here and followed by a stronger bearish movement candle. So with this, I have like my direction of where the market is heading to. So what I will now do is I'll go down to my 1 hour time frame and look for possible trade setup. So all that I do on 1 hour time frame too is very, very simple and very, very straightforward. Again, I look at market structure, I look at levels that were taken out, and I use this to define my point of interest. I still mainly use the supply and demand levels for my entries too on the 1 hour. For this, let's look at the supply and demand if it's going to give us any entry here. But very first thing I used to look at the structure, because when price gets to this kind of point of my major point of interest from the bigger time frame, I wait on the smaller time frame and see the reaction to structure. Look at this now. There's a structure here. The price broke. You can see we tested it several times, like 2 times before breaking it down. My stop loss is always above because I used to target 50 pips stop loss maximum on this strategy, because price can move back against you and still move in your favor. So with this, if you want to use only just structure to trade, now is a very good entry. Once the market move in your favor, you lock your profit, you put your trade on break even, fine. But let me see if there's other things that happen here that is going to pull me into this trade. If this structure, let me remove the structure first. I'll be looking at break of structure like this low here. You can see there's a break here. Is that a break? No, that was equal low. You can see there's a break here. I fail to enter this trade when this break has happened. Now I have a break of structure here. I'm having a break of structure here, and the only place I'll be looking to go into this trade again is at this level. If price should pull down into the supply level, I'll be going into this trade from this point. If price, let's say price retrace back, then give me some kind of confirmation that's going to drop, then I'll be going into this trade once again. But for now, this is what I have currently on GBP/USD, and this is the trade I'll be looking to take when price pull back into this. but by chance price may not even go back into that supply level and create another break of structure around this level. But my whole point is that I'm going to be selling this trade into this daily structure. That's it. But once the price reacts to this structure and still hold this structure, I'll be looking to buy from there. But if this structure is taken out, I'll be selling until I get to the next daily structure down there. So this is the current thing that is happening on GBPUSD. Let's see how this market is going to move. Let's see how it's going to move. But this is the overview that I'm seeing throughout this week and the next coming weeks. Let's see how markets will move. But for now, this is what I'm seeing. I'll be updating more on this to show how price has reacted to those levels that I pointed out and what has happened and what is going to happen again. So that will be all for now. Thanks for watching. Give this video a thumbs up, subscribe to my YouTube channel and turn on the notification bell. So that will be all for now. See you guys again next time. Bye.